Good morning, Jags. This is Fahad. Today is Friday, December 11th. Let's get started. The things that my team discovers sometimes just even surprises me. Here's a stock called ZEDGE, symbol ZDGE. Never even heard of this company up until this morning when Jay discussed this notable call out in the first read this morning. If you have the first read, you can open it and take a look at it. This company, I did not realize that there was a publicly traded company out there that sells ringtones for cell phones. And apparently it's a business, it's a big business, and there is a publicly traded, it's only 60, $70 million in market capitalization. And based on this commentary that came out from the management in the earnings report, they talked about that to date, the app has surpassed 465 million organic installs and currently has 32 million monthly active users, of which 30% are located in the well-developed markets. Paid subscribers, an important growth driver, grew by 214% year over year. And then moving forward, looking at 2021, the management mentioned that today our Shorts app offers a rich catalog for short stories rendered in text messaging like format. The second relates to penetration of Apple's ecosystem. Historically, Apple has shied away from the mobile phone personalization vertical. However, with the introduction of iOS 14, which was very recently, they opened the door for limited customization functionality, specifically with widgets and app icons. That's the comment from the CEO. So I'm looking at this stock, this tiny little company, and it is just ripping higher. Huge, huge monster candle yesterday. And looking at the pre-market, it looks like it's going to gap higher again by another 10%. Again, it's a very small 60 to $70 million in market capitalization. Just thought it was interesting, so I brought this up. All right, moving on, there is a stock that I would like to cover here, which is Interactive Corp, symbol IAC. This had a fabulous breakout yesterday. If you look at this chart, you'll see that this is a clean, nice breakout to a new 52-week high from about a month-long consolidation, or actually really if you go back and take a look at this thing in a more, it has been rather range bound for the most part of last 6 months between 120 and 140, so about 10 to 15% range, and then it finally broke out from this yesterday. This company, Interactive Corp, which we have discussed many, many times, it does a very interesting job on every single month. They put out this monthly metric for every single business that the company provides. And so this is a note that came out from December 9th, in which they provided the metrics for all of their divisions. Let me show you what these trends are telling us. Here is the actual, close this, so I have to open this, excuse me for this. I had it saved. Never mind. All right, let's go here. Here is the actual snapshot. If you look closely, Angie's Home Services, which I believe the company owns about 82% of, this division during the early part of 2020 performed very, very strong. By midsummer, it had slowed down to a negative growth rate, but take a look at the last 5 months. It went from growing 7% year over year in July to 12%, 9%, 10%, and now 14%. 14% would be the highest rate going back to the middle point of the year. Similarly, Vimeo went from 40%, 43, 49, 49 to 54. 54 would be the highest growth rate on a year-over-year basis for Vimeo in the month of November. Dotdash is a very interesting display advertising business. This thing is on fire. The company went from, the growth rate here went from 16, 22, 27, 29, 20, and then 34% year-over-year growth rate in the month of November, which would be the highest growth rate for this particular business in this entire year. Search Media Group advertisement, same exact thing. Now, this thing has been down all year long. This is not a profitable business for the company, but even this one inflected. You can see that all year long it was deeply negative. Minus 21, minus 17, minus 25, so on and so on. But starting from the September, it was only down by minus 14%, and then October minus 9%, and then November inflected to a positive growth of 12% year over year. So every one of the key businesses that the company owns is on fire. And they put out this press release for the month of November just 2 days ago. And so yesterday, the stock started to break out from this. Of all of these businesses that the company is on fire, there was a management meeting that took place between IAC and the BMO Capital analyst, in which they talked about what was one thing that stood out for them the most. This meeting took place yesterday, and the note from BMO Capital came out yesterday as well. And I will quote over here from the analyst. They say that the heart of Dotdash business is its investment in premium content with long shelf life that helps readers answer a question or solve a problem. The company purposely avoids news, sports, or other browsing categories. This particular division is attracting high commercial intent audiences with three key verticals: health, lifestyle, and finance. By focusing on users with high commercial intent, Mr. Vogel believes his company offers a contextual advertising opportunity that is superior to cookie ad tech driven methods and is immune to privacy oriented platform changes. The success in Dotdash approach can be exemplified in the company's sustained double-digit growth trajectory that has lasted 14 consecutive quarters to date. And then lastly, I'll point out, they also said they're seeing accelerated growth in performance marketing. While display advertising has historically made up of majority of Dotdash advertising revenues, the increasing shift to commerce from offline to online has accelerated with the onset of COVID-19 pandemic, causing performance marketing ad revenues for Dotdash to nearly double year to date. So there you go. Very, very strong comments. Dotdash is this business once again, right here. This is the display advertising business that posted the highest growth rate for the month of November. So one to watch. Let's see how the market will perform today, because NASDAQ is currently looking to open down by 90 points. The S&P is down by 27 points. So a small, tiny pullback in this name after a big breakout yesterday may actually provide that opportunity to get long and then look for more upside in coming weeks, with the momentum being as strong as it starts to run higher. So something I'll be watching closely. And that's it. That's all I have for you for today. Jay.
Morning, everyone. So just to give you a preview of one of the stocks I'm going to be talking about this weekend in Weekend Research, the stock is CALX, symbol CALX. We first covered this name way back in March of 2018, and then covered it on and off, and then I had it behind the numbers right up in July. One of the topics that I'll be covering this weekend surrounds the Rural Digital Opportunity Fund, or RDOF. Earlier this week, the FCC announced the winners of its RDOF Phase 1 auction. In the auction, $9.2 billion worth of funds were awarded to provide broadband for approximately 5 million underserved homes. Needham was out with a note, a very brief note, highlighting that they see CALX's end-to-end platform-centric solution as being especially well tailored to smaller Tier 3 service providers who comprise the vast majority of the RDOF winners. In addition, they also note that CenturyLink, the 10th largest RDOF winner by dollar amount, is CALX's largest customer. I know Jefferies has also done some nice work on RDOF. So this is one of the topics I'll be bringing to the table this weekend. And lastly, according to Jaguar Scan, there is still some open interest sitting in the January 24 calls.
Very interesting. Looking forward to that. I know that previously when we had discussed this in July, there was a lot of interest from among JAG clients that that bought into that position, and the stock had a remarkable run immediately after that bull case was presented. And then I went to a period of consolidation for about 2 to 3 months, and then earnings came out, another strong pop on high volume, and then now for the last 2 months, more consolidation. So the setup is still staircase upstairs, basically, consolidation, then a leg higher, then a consolidation, then a leg higher. So let's see what what we have in the cards now going forward from here. So looking forward to it.
Yep.
Chronicle.
Good morning. Something different today. So, as you know, Fahad, in addition to US markets, I also manage an Asian portfolio of Greater China and Japanese stocks. And I'd like to talk about one of them today, which is Nintendo. Now in the US, this trades under the symbol NTDOY. But if you're going to buy it on Tokyo Stock Exchange, then the symbol is 7974. And if your account is denominated in dollars, you might want to look into going into the Forex market and buying US dollar against the yen, because we're currently in a bull market and that tends to be negative for safe haven yen. Now, I like Nintendo a lot and I've owned this stock on and off for a couple years. So I could probably talk about the company the entire morning, but to summarize the bull case, it really comes down to 2 points here. First off, between Sony and Microsoft and Nintendo, it's Nintendo, which is really the purest play on consoles and gaming, because the other two companies are diversified and so they don't focus entirely on gaming. Sony stock is also starting to get overstretched here. Not that I think the stock can't go higher, but the risk reward in the near term is getting less attractive relative to Nintendo. But coming back to Nintendo, as everyone already knows, the company is involved in the development of both consoles and games. And over the last couple of years, management has successfully converted their revenue growth from being cyclical to being almost constant these days, which leads me to my second point. The biggest drivers for this have been their online platform for the Nintendo Switch, as well as their push for portable gaming, which is a very different direction from what Sony and Microsoft are doing with their PS5 and Xbox. Because with the Nintendo Switch, you can actually take it with you and play games outside, not just at your home. So you can play your games outdoors, save your progress, and then come home and continue on your TV. That's the idea. And meanwhile, this integrated online platform also acts like a mini social network, as well as an e-commerce store where customers can perform microtransactions and purchase games for digital download. Additionally, the platform is full of exclusive titles which are not available on PlayStation and Xbox, and so all of this has resulted in a sharp increase in recurring revenues for Nintendo. So if we look at this image, the company charges about $20 per year to join this online platform, which in a sense has become an almost mandatory payment because there's no way people can do without these benefits. Whereas with the PlayStation and Xbox Gold membership, I find those to be more of a luxury rather than a necessity, because with the Switch, you can't even play online globally without a membership. So it's almost mandatory compared to PlayStation and Xbox. So they could raise prices if they want to. I wouldn't be surprised if that happens down the road. So coming back to the financials, the company's transition to their online model has also helped sharply increase their gross margin. And as we can see from this chart, there's still plenty of runway here, I think. Now, when I read sell-side notes on gaming consoles, one misconception that I keep coming across is that Nintendo Switch is in direct competition with the PlayStation and Xbox. A lot of the notes like to lump the Switch with the other two. I think this is a wrong assumption to make. I mean, yes, people who buy the PS5 tend to not buy the Xbox. This is absolutely true. But this does not apply to the Switch, because there are lots of people who either own a Switch and a PlayStation, or a Switch and an Xbox, or they simply have just the Switch. So in other words, almost all roads lead to the Switch, which is why apparently if we look at one of the screenshots that I took, over 40% of Switch owners in the US also have another console. So this is not purely a direct competition, and it's not zero sum. It's almost like the PS5 and Xbox are competing with each other, and then the Switch is just doing its own thing. And then my final point here is to do with the latest channel checks. So as everyone already knows, both the new PS5 and Xbox Series X were released last month. Now, Fahad, would you believe me if I said that even though Sony and Microsoft released their new consoles, it was actually the Switch, which was the best-selling platform for the 24th month running. Like, even accounting for the fact that the PS5 keeps running out of stock, the absolute figure of 1.35 million units is still impressive for a 3-year console. And I think this says it all. Now, looking ahead, I think things are going to get even better because reportedly the company is going to launch their next Nintendo Switch in 2021. And also, when I go to check the online store on the Switch, I can already see that they have lots of AAA games and hundreds of other titles lined up to be released over the first half of next year. I would say that the amount of 2021 digital game releases being lined up on the Switch is almost double the amount that I saw last year. Meanwhile, when I check my PlayStation Store and Steam Store for PC, it's not as impressive. And I'm saying this as someone who tends to use the other two more often than I use the Switch. I think this should help the company in its efforts to increase higher margin digital sales as a percentage of revenue mix. Now, getting into the technicals, when I look at Sony stock, the stock has blown past its Q3 peak, but then when I look at Nintendo stock, it still hasn't broken past the previous quarter's peak, which tells me contextually that the market may not be paying enough attention to Nintendo at the moment. So putting everything I just said together, I think the stock has more upside right now relative to Sony. I have this ratio chart of NTDOY to SNE, and the ratio is currently around 0.75. I think it can get to 1. Like if the general market decides to roll over, I would expect Sony to drop more than Nintendo. And similarly, if the general market continues going up, I would expect Nintendo to go up more from here on a relative basis. Don't get me wrong, I'm not saying Sony is a terrible company, just giving the relative picture.
Yeah, very interesting update here, particularly with this ratio chart. There's definitely room for improvement over here. I think of everything over here that you discussed. This is quite shocking to me, honestly. When you ask me, would you believe if that Nintendo is actually outselling both PS5 and Xbox Series X, which was just recently launched, which are the first major refreshes for these two consoles in 5 years? No, I would not have believed that until you showed me this picture. So this is definitely speaking for incredible strength. And this has been going on already for so many quarters that, and they continue to fire on all cylinders. 40% year-over-year growth in the Switch sales to 6.86 million units in the quarter that just recently ended on September 30th. And then there's this major launch coming in 2021 as well with the 4K graphic output and better specs. So I do have one question. I don't know if you would know the answer right away, but just looking for a second derivative play on this. You know that PS5 and Xbox Series X both are powered by AMD chips. Is this the same case with Nintendo as well?
I'll have to look into that one.
Yeah, take a look into it. I wonder if AMD is powering that company as well. Could be interesting because then AMD simply is in the middle of all of this. It's the single biggest winner. Whoever basically outsells each other. But this is very, very good, very interesting update or very interesting outlook on this one. And technically too, this is a setup for a breakout. Unfortunately, Nintendo does not have any kind of option, so there's nothing we can trade on that side. But purely looking at the chart, this should easily start to crack through $72 resistance. And if it does, who knows, maybe this is heading towards $100 per share. We have a clean MACD bull cross that happened in the last couple of days. Similarly, RSI has started to trend higher, reaching at 60 level, which is the sweet spot for the momentum traders. So very interesting technical look, very strong channel checks. Fundamentally, the picture looks fantastic, so why not? Like it, and should go all the way to $90 to $100 per share over time as it starts to break out from here. Great stuff. Thanks, guys, for joining. And Jags, we will see you in the chat room shortly.